Hey, welcome back. It's Jason Walter here. Congress just passed a brand new $900 billion COVID relief bill, and part of this includes another eviction moratorium extension. In addition, the Federal Housing Authority, or the FHA, announced a foreclosure and eviction moratorium extension, as well as expanding the deadline to request an initial mortgage loan forbearance for homeowners with an FHA loan. And the Mortgage Bankers Association also announced yesterday, we had a ton of news that happened yesterday, but they announced yesterday that the share of loans in forbearance increased unexpectedly recently. So in today's housing market update, I'm going to share all the details about this, so stay tuned. And before that, please subscribe to this channel if you haven't done so already. I post videos about how this pandemic is affecting our real estate market. I really enjoy making these videos for you, so hope you gain a lot of value out of them. Also, if you do appreciate real estate market updates, please hit the like button. I greatly appreciate that. Okay, let's go ahead and dive into the video. Okay, thank you so much for doing that. Let's first discuss this brand new $900 billion COVID relief plan, because that includes this eviction moratorium extension. On page 2,281 out of the 5,583 pages of this COVID relief plan, it states that there will be a temporary halt in residential evictions to prevent the further spread of COVID-19, and that is extended through January 31st, 2021. This effectively halts all residential evictions for another month, because that was set to expire on December 31st. To also assist renters during this pandemic, the $900 billion relief plan also provides $25 billion in emergency rental assistance. That's in addition to another round of stimulus checks or direct payments to the American people, which will be $600 per person and $600 per child, plus a 10-week period of $300 per week for federal boost to unemployment benefits. If you want more details regarding that, I actually made a separate video about that. I'll leave a link in the description below for you. The passing of this relief bill is very timely because there was a recent survey done by the U.S. Census Bureau that stated that 1 in 8 renters had no confidence in making their rent payment next month. On top of this COVID relief plan, I also noticed yesterday that the FHA, or the Federal Housing Authority, announced that they are extending the foreclosure and eviction moratorium on single-family FHA mortgages through February 28th, 2021. This is the FHA's 4th eviction and foreclosure moratorium extension. It basically prohibits servicers, which are the company that you pay your mortgage to, it prohibits servicers from initiating foreclosure and eviction proceedings. However, there is one exception to this moratorium, and that's for those secured by legally vacant and abandoned properties. In addition, the FHA has also extended the deadline through February 28th, 2021 for single-family homeowners with an FHA mortgage to request an initial mortgage loan forbearance. So if you have an FHA loan on a single-family house and you have not entered into a forbearance yet, you have until February 28th of next year to enter into a forbearance. If you're not familiar with how to enter into a mortgage loan forbearance and you are experiencing a financial hardship, let me give you a brief rundown about how this works. And this was thanks to the CARES Act that was passed in late March. Let me share the actual text of the bill of the CARES Act regarding loan forbearances. So if you have a federally backed mortgage and you're experiencing a financial hardship due to COVID-19, then you may request a loan forbearance from your loan servicer. You do this by submitting a request to your loan servicer and affirming that you are experiencing a financial hardship due to COVID-19. And that forbearance should be granted up to 180 days and shall be extended for another 180 days at the request of the borrower. So theoretically, this is for a 12-month mortgage loan forbearance where you do not have to pay your mortgage payment, the principal and interest segment of it. And upon receiving a request for forbearance from the borrower, the servicer, with no additional documentation required other than the borrower's attestation to the financial hardship due to COVID-19, provide the forbearance for up to 180 days, which may be extended for an additional period of up to 180 days at the request of the borrower. Okay, so going back to this FHA forbearance extension, step number 1 would be to make sure you have an FHA loan. If you do not know, just contact your loan servicer. If you are experiencing a financial hardship due to COVID-19, just call your loan servicer and say, I have a financial hardship due to COVID-19 and I want more information about entering into a mortgage loan forbearance. It goes without saying here, but I do have to mention this. Of course, only do this if you are having a hard time paying your mortgage or you anticipate you will be having a hard time paying your mortgage in the near future. Then if you do call your loan servicer and request a mortgage loan forbearance, they should grant you a 6-month forbearance period. However, if you want to do another 6-month period after that, you do have to contact your loan servicer and make that request before your 6-month period expires. And of course, a quick reminder here, you do not have to pay all your missed payments in one lump sum payment. You are not required to do that. It actually says on our website that FHA provides post-COVID-19 forbearance loss mitigation options to assist borrowers with bringing their mortgage current. FHA does not require a lump sum payment at the end of the forbearance period. It was also announced at the beginning of December that if you have a mortgage backed by Fannie Mae or Freddie Mac, then there's a moratorium in place until at least January 31st, 2021. The key words here, of course, are at least, because this has been extended several times this year. And of course, that could get extended yet again, so make sure you're subscribed to this channel and I'll keep you updated with new developments on that. In other forbearance news, the Mortgage Bankers Association released their latest survey, which noted that the share of mortgages in forbearance rose to 5.49%, and this equates to about 2.7 million homeowners that are currently in forbearance. It's important to note that the share of loans in forbearance for Ginnie Mae loans, those would be FHA and VA loans, continues to be about double the rate, or actually more than double the rate of other loan programs, and the numbers have been increasing as well. For example, the share of loans in forbearance for mortgages backed by Fannie Mae and Freddie Mac is only 3.25%. And by the way, about 60 to 70% of all the loans out there are backed by Fannie or Freddie. However, Ginnie Mae loans in forbearance increased 11 basis points to 7.79%, so about double the rate of Fannie and Freddie Mac loans. What I found most troubling in MBA's recent survey here is that forbearance requests from Ginnie Mae borrowers reached the highest level since the week ending June 14th. I mentioned this in a previous video of mine, but I do expect forbearance numbers to potentially increase because we have new restrictions by cities and states due to this surging pandemic. There was a couple other things on this MBA's latest report that I found very interesting. I definitely want to share this with you. So by stage, about 19% of total loans in forbearance are in the initial forbearance plan stage, while about 78% are in a forbearance extension, meaning they have done a 6-month forbearance period and excited to do another 6-month extension thereafter. The remaining 2.69% are forbearance re-entries. Those we don't want to see go up because that means that someone had a financial hardship due to COVID-19, enter into a forbearance plan, exited the plan, and decide to re-enter again. In addition, they have a really good breakdown of what has happened after people have ended their loan forbearance. And let me share that with you. So they say that out of the cumulative forbearance exits for the period from June 1st through December 13th, 2020, about 30% represented borrowers who still just made their mortgage payments. So even though they didn't have to make their mortgage payments, about 30% just continued to make their mortgage payments even though they were in forbearance. Really interesting to see that. About 25% resulted in a loan deferral or a partial claim. About 16% resulted in reinstatements in which past due amounts are paid back when exiting forbearance. And about 13% represented borrowers who did not make all their monthly payments and exited forbearance without a loss mitigation plan in place yet. I highly recommend that if you exit your mortgage loan forbearance, contact your loan servicer before you do that to discuss the options you have available, because you do have options. And about 7.3% resulted in loans paid off through either a refinance or by selling their house. And 6.9% resulted in a loan modification. The remaining 1.9% resulted in repayment plans, short sales, deeds in lieu, or other reasons. And by the way, deeds in lieu basically means deeds in lieu of foreclosure, which basically means you hand the keys over to your loan servicer and say,
hey, I'm out, I'm not gonna be paying my mortgage anymore, but I wanna avoid doing a foreclosure.
Doing a foreclosure is a bigger hit on your credit than doing a deed in lieu of foreclosure. And by the way, if you're curious to know what options you have as a homeowner, if you have entered into a forbearance and you want to exit, what options you have to pay those monies back, I actually made a detailed video about that for you. I'll leave a link in the description below for you. If you enjoyed watching this video, please hit the like button. I greatly appreciate that. Videos like these tend to take hours to make, and I greatly appreciate your support because YouTube is not my full-time job. So I greatly appreciate your support on that. Also, if you haven't subscribed already to the channel, I invite you to do so. I post videos about how this pandemic is affecting the real estate market, and I really enjoy making these videos for you. You also can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day, and I look forward to seeing you on the next video.